Everyone wants to buy what's already pumping, but the real money in crypto has always been made by identifying what would pump, what should pump before it does. XDC is down 76% from its all-time high while building more real-world infrastructure than 95% of the top 100. The question isn't whether XDC has fundamentals. The question is whether 2026 brings the liquidity conditions that force the market to finally pay attention. Today, we're running the numbers on exactly what needs to happen, the realistic price targets if conditions align, and the specific trading strategy I would use to position for this without getting wrecked. This is not a financial advice, always do your own research. Let's be honest about the trend. XDC has been in a brutal multi-year accumulation phase. It is currently trading around 3.6 cents with a market cap of $702 million. To put that in perspective, the all-time high was a bit over 18 cents back in August 2021. 5 years ago, almost 5x higher than where we are now. Given this underwhelming performance, the question every holder asks, understandably, is if the tech is so good, why is the price doing nothing? Here's the hard truth. Markets do not reward good technology per se. They reward aligned liquidity and narrative. What's more, right now XDC's dominance is sitting at 0.026%. At its peak, it was nearly 5 times higher at 0.11%. See, the market has effectively ignored XDC for 2 years because the enterprise RWA narrative is boring compared to the casino of DeFi and memes. I get it. But let's focus on the XDC fundamentals now and find out what's going on beyond the price. XDC isn't trying to win crypto Twitter. Rather, it's trying to be foundational for trade finance, tokenized assets, and cross-border settlements. Stuff that matters, but barely pumps on vibes alone. Looking at the XDC 2.0 upgrade, it has dramatically tightened core protocol security and performance as it introduces a next-gen consensus with 3 block finality in about 6 seconds, and B, built-in forensic monitoring that has military-grade security. These make the chain far more difficult to attack and more reliable for enterprise use. The XDC network is fully ISO 20022 compliant, meaning it natively speaks the same standardized data language as global banking systems and SWIFT. For example, SBI Holdings uses this to bridge the gap between traditional finance and blockchain, turning slow, paper-based trade documents into instant digital assets. This brings automated trust to the system because every participant can verify the data without a middleman slowing things down. Now, the biggest development for XDC is acquiring Contour Network. This is a massive deal because Contour was originally a digital trade consortium founded by 8 of the world's largest banks, including HSBC, Citi, Standard Chartered, just huge names. And to top it all off, the recent integration of the Layer 0 OFT standard finally allows XDC tokens to move seamlessly to over 125 other blockchains like Ethereum, Arbitrum, Base, using the Omnichain Fungible Token standard. The biggest mistake I see XDC holders make, though, is believing that the best tech wins. For those of you into tech history, you know that BMX had better tech than VHS, but it still lost. In crypto, it's not a tech contest, it is a liquidity competition. And if you're waiting for a bank to announce they are using XDC to magically pump your bags, I regret to inform you that you're gambling and not trading. Let's talk about what actually drives altcoin bull markets, aka the macro factors. For a lagging altcoin like XDC to move, we need a rising tide that lifts all the boats. We need 2 conditions in particular, and these are the following. 1. Economic expansion. We need the ISM manufacturing PMI above 50. This signals that real-world businesses are expanding, which is the only time they spend money on new tech, such as XDC. And 2. Liquidity expansion. We need the central banks to cut rates and expand their balance sheets. This one, at this stage, doesn't seem very likely with Jay Powell still at the helm of the Fed, but it could change with the next chairman, Kevin Warsh. The truth is that without these 2 things, XDC will likely continue to bleed. But 2026 is the year we expect these conditions to finally align. If they don't, No amount of partnerships will save the price. Now let's see what the chart is telling us, because as we like to say, show me the charts and I'll tell you the news. And when we look at the chart, we see the news have not been all that great. The price is in a range since February 2021. It did try to push for a new all-time high, but failed, and now it is down 76%. Locally, we get to see lower lows with a strong downtrend. And the next big support that we can find on the chart is this one at around 2 cents, which the price has tested 3 times as support before. Each time the price was at around that level, the RSI was signaling that XDC is oversold. Right now, the RSI is showing the most oversold level ever. But this is not enough to start buying XDC, as the RSI can go even lower with price. This support is just another 40% move to the downside. So we can expect something like a bullish divergence where the price will make lower lows and the RSI is going to make higher highs, just like it happened in 2022, which marked, I remind you, the low for that range. I'm about to run the math to see where we can expect XDC to go now. If we get the macro alignment with the money printer and PMI going above 50, then there are 2 likely scenarios for the price action that I want to explore with you. 2 indicators will be key in the analysis here. These are the total market cap and the market cap dominance of XDC. The total market cap can easily do 3x when we get these 2 catalysts and reach $9 trillion. With regards to the second indicator, that's the XDC dominance, its highest level has been at 0.1%. Now, for scenario A, we will assume XDC market dominance of 0.1% and $9 trillion total crypto market cap. In this case, the market cap of XDC would be at $9 billion and the price of a single token would amount to 45 cents. And on to scenario B now. If XDC gets used widely in the enterprise sector and market dominance shoots up to 0.5%, the market cap then would grow to $45 billion and XDC would trade for $2.25 a piece. But this is scenario B, and it's only viable if we get the main liquidity injection from the macro perspective. If that doesn't happen at all, then the price will continue making lower lows, I suspect, and I think it will reach the next major support, which happens to be at around 2 cents. Now, here's how I would play this. I will buy XDC only when we reach that support zone at 2 cents and get the 2 catalysts in place. And for the profit-taking part, I intend to sell 50% of my holdings at 20 cents, which is the previous all-time high. The next 25% I'll sell at 45 cents, and I will ride the final quarter all the way to 2.25. That's the most bullish case. In case things go south, however, and the price starts dropping and does not hold the support box, I will get out at around 1 cent. For these trades, I'm going to trust CoinEx, and I recommend you check them out too, as they are giving a $25 bonus to each new user. Hit the link in the description below, trade on CoinEx whether spot or leverage, and grab your $25 now. But what if conditions never align? Then I don't trade it. No trade is also a trade. Sitting in stablecoins while waiting for the right setup is a perfectly valid strategy, guys. Remember, you don't get paid for forcing bad trades. Look, 2026 is going to be a challenging year for XDC, at least the first half of it, while Jay Powell is still at the Fed. But the fundamentals are there. The infrastructure is being built. And yet, the price doesn't move on fundamentals only. It moves on liquidity and timing. So here's my question for you. What is your realistic target for XDC in 2026? Drop it in the comments. If this was helpful in any way, hit the like button and subscribe if you want more analysis like this one. See you in my next video with airdrops.com. Ciao.